let's get it starting.
All-time highs for Bitcoin.
Honestly, Bitcoin price action has thwarted all of our expectations, including the Bitcoin ETF issuers.
It's already the most successful ETF that BlackRock has ever issued. I like this sort of aircraft carrier approach to investing in crypto.
This is how you analyze crypto. Bitcoin has paved the way. We're going to see Ethereum. We're going to see Solana.
I just pulled up this dashboard here, decentralized physical infrastructure network. And what they're doing is essentially mapping the world. Google, 16 years to get to the total mapping that they have today. It's taken HiveMapper a year to get to half of that. I must admit, I have purchased my first Memecoin in this cycle.
Better late than never.
You need to sort of adapt and see the world as it is and not as you are, right? Dog with hat as well.
I missed out on that. Internet cultural asset.
Confession on the rundown today.
If you say we should go on chain, I'm going on chain with you.
MBRV ratio. What is it? It is the market value to realized value ratio, open interest futures contracts. So there's just a lot of activity here.
Structural Wall Street coming to Bitcoin and being open to it as an instrument. We probably are going to see Bitcoin very close to gold's market cap.
Okay, just to double click on that, you're saying Bitcoin
approximately 650,000 US dollars gets you to match the market cap of gold to double. Okay,
after hitting all-time highs. Yeah.
Okay, I think it would have been less than 45 days.
It was 10 days.
10 years from now, people would be like, this was so obvious that this is the new age of...
This is probably going to be one of our longer episodes here.
Welcome, everyone, to episode 17 of the Rundown Podcast. I'm Shiv, and I got my co-host Michael with me, your one-stop shop for all things crypto and on-chain analysis, with our expert in-residence person, Michael Nadeau, as well with us. And I assure you, the reason why I'm not having my party glasses on is because Bitcoin just touched all-time high. It's more so because I'm a little bit under the weather. I got something like cold and flu happening, and I didn't want my puffy eyes to be visible. So I'm like, okay, I'm going to get my glasses back on. So that's the reason. But yeah, all-time highs for Bitcoin, Michael.
All-time highs for Bitcoin. Shout out to you for playing hurt today. This reminds me of, I don't know if people remember back in the 90s, Chicago Bulls, Michael Jordan in the NBA Finals playing the flu game. Shiv is stepping up to the plate today. This is Shiv's flu game for the rundown. So shout out to Shiv for showing up today. Yeah, I mean, it's all-time highs this week. So, a lot to talk about. I think it makes sense probably to just jump into just give a quick overview of where we're at with the ETF. I know we've been sort of harping on this, but it's just incredible what we're seeing. Let's talk a little bit about the ETF. We want to talk a little bit about Solana and sort of how we're approaching Solana from sort of an investor's mindset. This is not financial advice as always, but we want to sort of share how we sort of built a portfolio around Solana and how we built a thesis, really high level. We're not going to go too granular today. And then we just want to give a quick update on cycle awareness, right? So we're going to go on chain and we're going to look at basically all of the market signals using on-chain data for kind of where we're at in this current cycle. We've seen a massive run up just over the last, really starting Q4, but even just over the last few weeks, we've seen a big move. So cycle awareness, where we at? Is retail here? What's happening on chain? We'll wrap up with that. So hopefully people stick with us till the end of the show.
Look, the average view duration of our episodes are always high. People love our show, so I'm pretty sure they'll be pumped for this episode as well, especially with all the insights that you bring. And first of all, thank you for the shout out. I appreciate it. I hope I live up to it by the end of this episode. We'll see. I hope you don't break me if it's not great. But I do have to say, since you've been very kind to me with the compliments, that you were actually the one that really opened my eyes on, the benefits of the Solana ecosystem from having it within the investment portfolio. So I personally am very excited because it was your research that made me have a different outlook towards Solana. And I'm glad that we are doing this on the podcast now, because what I got to know from you about the Solana ecosystem months ago is now going to be shared with the people at a whole wider level. So this is exciting. And of course, for all the viewers out there, you guys watch each and every episode and you send the messages on our respective socials. You saw the Bitcoin health check that we did last year. And we said the fundamentals of Bitcoin is at an all-time high. Price action will follow. We covered that again during the first episode of this year, where we made each other accountable and said that these are our predictions. Honestly, Bitcoin price action has thwarted all of our expectations, including the Bitcoin ETF issuers, and we had one from Bitwise that came on our podcast as well. All-time highs, the Bitcoin, spot Bitcoin ETF buying so much. It's just the start of March. RIAs in the US, they haven't got their hands over the integration with all these Bitcoin ETF issuers. Halving coming in less than 50 days. I mean, has there been a better bull scenario for Bitcoin than now? Can't wait to do the health check again and do the cycle update. So let's get it started.
Let's get it started. Yeah, a lot to talk about. So let's just jump in. I just want to share real quick where we're at with the ETF and just kind of the infos here. So I'm going to hop into Glassnode. So yeah, shout out Glassnode for the data here. This is showing balances. These are Bitcoin balances. This is not flows. We've talked a lot about just the flows that have come into these things. This is just the total Bitcoin that these ETFs have absorbed. And so we're already at 775,000 Bitcoin that has been bought up by these ETFs. That is almost 4% of the Bitcoin circulating supply. So we've talked a lot about how this has just been wildly successful. I think it's just exceeding really, and even the most bullish expectations at this point, which is something to say, because there's a lot of hyperbole in crypto in our industry, Shiv, as you know. And I think a lot of people were excited about this ETF, but this is really exceeding, my expectations. I think it's exceeding yours. And, when we did our predictions for the year, I was projecting that Bitcoin would breach all-time highs in Q4, right? We were making those projections just a few months ago, and we already did that in the first quarter. And so I do think that there are many, many analysts out there that have to sort of take a step back and reassess what this cycle could potentially look like, because I think even what we're seeing with this ETF is a lot of these flows, they're coming from probably mostly hedge funds. We don't really have this really granular data right now, but we know that the issuers of these funds, it takes time for them to get some of the largest asset managers on board, where they're offering these products to their customers, and then they're starting to integrate it into portfolio construction. So this process takes time. We're less than 2 months into this, and we've seen this, this many flows already. I'm sort of revisiting my thesis for this cycle is sort of the takeaway here, but it's definitely pretty bullish. There's a lot to sort of think through. It's possible that because you do have more institutions in Bitcoin for this cycle, that they will actually sell. If you get a 20% gain in a month or so and you're a large institution and there's a lot of capital at play, that's one potential outcome. On the other side of that is, you have these large asset managers such as like the Fidelities, BlackRocks, and if you start to see a lot of sort of automatic buying coming into something like Bitcoin through more of like a 401k account, right? That's not leaving those accounts.
Exactly.
And I think it's possible that Bitcoin has the highest market cap of any U.S. company, any U.S. publicly traded company by the end of this cycle. It's in the top, it's number 6 currently. And so when you think about the largest companies in the United States, in the United States stock markets, everybody owns them, right? Because everybody has a 401k account or a brokerage account, and you have exposure to the S&P 500. So if Bitcoin becomes the largest financial asset in the United States, I just think everyone's going to have exposure. You have to have exposure to it. It becomes, we've talked, you've heard this saying where, Bitcoin in the early days, there was career risk to not having exposure to Bitcoin or to having exposure to Bitcoin because of the volatility. I think that's actually flipped to there's career risk to not having Bitcoin in your portfolio. So it's a bit of a ramble, but I mean, I think all this to say that is really bullish. And we're going to get into the on-chain data stuff and look at actually where we think we are in this current cycle later in the episode. But I'll turn it over to you and just get some of your thoughts on all this.
I think we've covered consistently over time. You brought up your analysis as well. You brought up Google Trends as well. And I gave some anecdotal evidence about my mates in Australia who run crypto exchanges over there. So shout out to BTC Markets, which is a crypto exchange based out of Melbourne, Australia. and they're one of the biggest crypto exchanges in Australia. And the CEO is a mate, Caroline. She's going to come on the Proof of Work podcast as well. She's gone out in public and said that because she, biggest crypto exchange in Australia, and she said that the retail investors hasn't come out, at least in Australia, like they did in 2021. So we're spot on. We've been saying it consistently. I'm not repeating it to say that we told you so, but just to validate the fact again that retail audience hasn't come in. All this that we are seeing is because of the Bitcoin spot ETF effect and US institutional interest mostly. And, this is just the start. It's really the start, I feel, like you.
It's already the most successful ETF that BlackRock has ever issued. Right. This is wild stuff. We can go on and on over this. I mean, I think it's bullish. I think the big takeaway here is we have to sort of reassess what the projections were just a few months ago and start to think through. And that's some of the work that I'm currently doing. Why don't we pivot over to Solana? We've talked a lot about Ethereum on this show. And we talked about, I've created the Ethereum investment framework and we have a thesis for Ethereum, but we are not tribal around this. I think I get a lot of questions around this because of the sort of tribal nature of crypto. If you write the Ethereum investment framework, people assume you're like a ETH maxi, right? That's just like how crypto is. That's not the case. And we've sort of formed thesis over a number of layer one blockchains. And we sort of think there's going to be 4 to 5 major big ones. We've come to a conclusion on 3 of them so far, which is Bitcoin, Ethereum, and Solana. And so I want to start to cover Solana more on this show. One of the challenges with covering it through the DeFi report and some of the other sectors has been just on the data side. Solana is just a newer network and there's not as much infrastructure already built out on the data side, but we're getting there and we're going to start to do more research reports, analysis of various sectors and business models within Solana. What I want to go through here is sort of a framework, or at least a very high level framework for, how you kind of get to a thesis on a layer one. And then if you're deep in this stuff, I like this sort of aircraft carrier approach to investing in crypto where you come to a thesis for the L1, and that's the aircraft carrier. And then you start to build a thesis around what's the critical infrastructure needed around that aircraft carrier, which is like other jets and stuff that are on top of it. And so, for example, when you build an Ethereum portfolio, you might have a thesis for ETH, but then you might say, well, data oracles are critical infrastructure around the L1, and data oracles have a much lower market caps, and you might think that there's a chance that the data oracle actually outperforms ETH, the asset, in the cycle. You could do that for other infrastructure such as identity, such as liquid staking, DeFi protocols, things like that. So I've taken that same framework to Solana. We developed our thesis on Solana late in 2022, and then during the bear market, we were basically doing all of our due diligence on the rest of the ecosystem as it was basically being rebuilt after FTX and all that. And so we've kind of taken that same approach. I want to kind of go through what I think are like the important sectors to look at and like how you might kind of have that thesis on Solana and then, build out a portfolio around that. It's just going to be high level. Again, not investment advice by any means, but I think this could be helpful for people out there. So
yeah, definitely it will be helpful. So yeah, we should definitely look into this. Yeah.
Okay. So we're going to just start with liquid staking. Like we know that this is obviously a business model that is around. It's here to stay. We've got some protocols on Ethereum that Lido, for example, has a $3 billion market cap, which is like an all-time high currently over in Ethereum. And when you look at Solana in terms of the liquid staking, and we did a report as well, so people could find the report on the DeFi report, recent update on Marinade Finance. And we had formed a thesis that, looking at the total stake rate of Solana, and it's over 70% or so, and then looking at the percentage of that total stake rate that is actually in liquid staking. And when we started to look at this, that number was around 2.3%. And so then if you look at that and take that over to Ethereum, it's actually like 85% on Ethereum. This is the total amount staked on the network, and then the percentage that's in liquid staking versus someone just running their own validators and then not having it in a liquid staking solution. And so why would somebody want it to be in a liquid staking solution? Because not only are you earning the fees from validating transactions on the network, but you're actually liquid. So then you have a token that you can then, put it into a DeFi protocol and earn additional fees. And there's more utility and more potential yield if you're doing it in a liquid staking setup. And of course, you stay liquid. So the thesis is that this gap has to close between the amount that's in liquid staking and the amount that's in total SOL staked. And since that thesis we are up to about almost 6% is now in liquid staking. Part of this is because Jito rolled out, and we talked about, Marinade versus Jito on a prior episode. And I just updated these numbers recently. But one way to approach this is, okay, you've got the thesis on Solana. You've got the thesis on, why liquid staking is a growing market on Solana. And then you start to look at the actual protocols. Marinade and Jito are the top two. There are others as well. And you can kind of do your due diligence on the actual projects from there. So there's like a layered approach, kind of going deeper and deeper. This obviously shows that, Marinade is still the leading liquid staking solution on Jito, and its market cap is significantly lower than Jito. So this is where you start to get into the analysis, and maybe you can get to a place where you have a thesis that this gap needs to close. From a fully diluted market cap perspective, it's like 12x. Probably not right? And so if you think that gap's going to close, and then you have to say, well, is this going to outperform Sol? Otherwise, you just want to own Sol and stake your Sol. This is sort of the process that I would go through. I'm curious, is there anything you would add or that I'm missing on this?
No, I think you covered everything. But yeah, just like quickly for all the people out there who watch the show who are mostly from traditional finance. I mean, this is how you do the peer analysis for like-to-like projects, which is also very important, that not many people within crypto from an investment point of view do it. So Michael is showcasing a really good way to do peer analysis, and then to be able to gauge that what is relatively undervalued and what is relatively overvalued, so that you can capture the alpha. At the moment, we're in a bull run, so everything is going up. So if you compare crypto tokens to any other asset class, you would think that you're doing well. Like even in a bull market, you want to capture the most alpha. So doing peer analysis between like-to-like projects is very important. It's a good framework that Michael, you're showcasing.
Yeah, so that's kind of the liquid staking piece of this. There's a few other sectors I just want to kind of touch on. And the other one that we were looking at, during the crypto winter was DeFi and trading in particular. And like what we've seen is that trading activity on Solana has just been picking up to the point where it's actually DEX volumes are starting to exceed those of Ethereum on some days.
So can I just quickly ask you over here, when we're saying DEX volume on Solana is more than Ethereum in certain days, like this includes for Ethereum and Solana respectively, all the popular DEXs. So like Uniswap DEX volume is included and all that. And Solana's DEX volume, aggregate DEX volume for the chain in certain days is higher than Ethereum. That is massive.
That's crazy, right? I mean, I think, and we've seen this from a stablecoin perspective as well, where there's been some days where, because the fees are so low on Solana and you can do so many transactions, when you think about trading volume, you can imagine why that start to compete with Ethereum. So, if it's already doing this and we're really kind of early in this cycle, where is that potentially going? And then, okay, what are the major DEXs on Solana? And you can start to think about, is there a thesis here where is there a DEX that may get to the volumes of, or may already be at the volumes of something like a Uniswap, and then what's its market value today compared to the Uniswap? And like, I'll just look at some data here. We're jumping into Dune. That was some Artemis data that we just shared. Just jumping over to Dune, and this is a nice just dashboard of basically Solana DEX overview. And the one that I am primarily looking at is Orca. Orca is sort of the Uniswap of the Solana ecosystem. It's got a much lower market cap than Uniswap, and we can see that it's kind of like the market leader. Uniswap owns more of the market on Ethereum than Orca does on Solana. Uniswap is closer to 60-70% market share, whereas Orca has been in the 40 to 50% market share. Radium is the number 2 DEX in the ecosystem. And then what's interesting here from DeFi and DEX on Solana is that Jupiter, which is an aggregation tool, so it kind of sits on top of all the DEXs and just finds the best price. And that's actually where I buy assets on Solana, is on Jupiter. So it's really tapping into, Orca and Radium sitting underneath and getting you the best price. That has a much higher market cap than Orca today. Jupiter does. So Jupiter launched their token, much, much higher market cap, like 13x on a fully diluted basis. That is interesting because Uniswap has a much larger market cap than like 1inch on Ethereum. Why is this happening? Kind of unclear, but you could start to think about this and say, well, maybe that actually doesn't make sense. Maybe it does make sense. Maybe it doesn't. And if it doesn't, then that gap may close, and then there's an opportunity with something like Orca. That's sort of the the thesis from a DEX DeFi perspective. Yep.
Can I ask you, because I'll be honest, I have been an avid user of 1inch protocol. I love 1inch as the aggregator of DEX on Ethereum. I've used it often, and I hold 1inch tokens, and rightfully so, like you mentioned, they have underperformed relatively against Uniswap, let's say. But also other PancakeSwap is also other one. I know it's a different chain, but like the aggregator 1inch, my thesis was exactly that it's an aggregator, you get the best price. They would do better than the other ones. But surprisingly, the token has underperformed the other DEX's tokens. I wonder that with Solana, that this is not applicable, where Jupiter has got a higher market cap than the other DEXs that have got a higher volume. Is there a role of which venture capital fund is funding these protocols? Does that play a role? Because in my humble opinion, I think the marquee venture capital investors that have invested in Uniswap, that has, in my humble opinion, played a big role in the narrative or the sentiment, whatever you want to call it. I think that played a massive role in Uniswap tokens being really high. And even when the price was down, they come up with certain strategies to capture the value, like they did it recently. And the token went up more than 50%. According to you, I'm interested to get your take, and I think the viewers would be interested to get your take as well. Do you see venture capital investors investing in these protocols playing a huge role in the price action and the market cap?
It's a great question, and just the thought process in general for how this could shake out this way, where you have Jupiter more highly valued than the DEXs, and it's the opposite on Ethereum. I think it does play a role. I think the actual thing that sort of is playing out here is a combination of like VCs. I don't think it's just VCs. I think VCs are sort of the tip of the spear, and then that becomes narrative and branding. And I think that's, and just sort of mind share, right? So now because there's influencers on Twitter and, for whatever reason, certain brands become more popular. And I think the difference between what's happening on Ethereum with Uniswap versus 1inch as the aggregator, and I would agree with you that when you think about aggregation theory, the things that aggregate in Web 2 are the most valuable. Like, what is Google? It's just aggregating search. And that's basically what 1inch is doing. It's aggregating the liquidity and then just finding the best. So the question comes down to, where does the user go? Is the user going to 1inch, or are they going to Uniswap's interface? You'll find on Ethereum is actually that 1inch does not own the relationship with the user. Uniswap does, because of the brand presence, I think. And maybe it started with VCs. It could have started with VCs. And that's why you see Uniswap building out. So now what you end up seeing with Uniswap is they're integrating throughout the tech stack, where they built a wallet, right? Because they want that relationship with the user. And so we'll see. I think what's happened on Solana is actually Jupiter right now has the relationship with the user. And so that valuation may actually make sense. We're going to be doing some much deeper research on this through the DeFi report and getting to a thesis, but it's a fascinating topic to dive into. But I really think it comes back to like, where is the user actually interfacing? They probably should be on 1inch, because I think you get actually better execution and cheaper fees through 1inch, but brand just tends to matter, I think.
So me and the Rundown viewers would be looking forward for that DeFi report to come out then.
Awesome. Let's shift over. We just talked about DeFi. So we talked about liquid staking. We talked about DEXs. There are lend borrow protocols on Solana as well. We're not going to get into them for the sake of this show. The other critical infrastructure that I've been focused on Ethereum, and assuming that that's going to be the case on Solana, would be data oracles. And the largest data oracle on Ethereum today is Chainlink. And they've really kind of owned the market around Ethereum. And these data oracles, what they're doing is bringing data from off-chain to on-chain. And this has primarily been built out around price feeds for DeFi currently. And so, obviously this infrastructure is really important to be able to bring off-chain data on-chain, so that then smart contracts can do their magic and automate, various services and business logic. And so, looking at Solana, we would say, okay, there has to be a data oracle network protocol on Solana that's probably going to capture market share. And there is one. It's called Pyth, Pyth. Pulled up some data here. We're on Dune again, and this is kind of like a Pyth versus Chainlink data dashboard that shows what's happening on the two networks. And what we can see is like basically Pyth owns Solana and Chainlink owns Ethereum. This is really where we get to the comparison. But like you can see, like basically all the transactions for Pyth are coming on non-EVM. All of the transactions for Chainlink are coming from EVM solution. And so that kind of tells you Chainlink owns the Ethereum network, Pith owns Solana. They basically have built out price feeds for all of DeFi and everything. Everyone's using Pith currently today. And they launched their token, I think, in Q4 as well. So again, the exercise here starts with a thesis for the L1. What's the critical infrastructure? If you think data oracles are critical infrastructure, then you go a step deeper and look at some of these protocols and kind of go from there. And then you can kind of look back and say, where did Chainlink valuation, at the peak of the last cycle? And then you can kind of start to back into where something like Pith could potentially get to. And then you would say, is this going to outperform Solana from here? That's it on the data oracle. This is another one that people can give a look as well, but then you got to do your full due diligence on the actual project, the team, and everything from there.
Yeah. So look, just quickly, I think, there was a reason we started this podcast, because we didn't just want it the interview kind of a podcast, and we didn't want it to open up a chart and draw lines on the charts. This is exactly the reason we started this podcast that we've been running for 17 episodes now. People realize the level of research and analysis that can be done, firstly, through these platforms like Dune, which is amazing, that we can, just query up the SQL query and we are able to analyze at such a deeper level because everything is on the blockchain. And once you're able to analyze, you're able to make a more informed opinion, regardless what the market sentiments is dictating you. Just like what you did in 2022, did the due diligence and, explore Solana ecosystem, realize this is so undervalued. And I believe now you're enjoying the benefits of it, even if you haven't sold your assets, but at least on paper, you would be happy with the performance of it. But this is what I really am proud of with the Rundown podcast that we both have been doing, which is really going to the fundamental layer rather than shilling tokens, really going to the fundamental layer and exposing mostly to business students and through the traditional finance community that this is how you analyze crypto, and this is a legitimate asset class. Bitcoin has paved the way, but this is just a start. We're going to see Ethereum, we're going to see Solana. And when you go further within that ecosystem, just like how you have so brilliantly showcased so far with your analogies and your research, that this is how you do analysis within the ecosystem to find undervalued and overvalued gems. Doesn't matter what the market dictates. It's fundamentally overvalued and undervalued, just like how you do with stocks. You're able to do it. Platforms are available. You just need to do research, have a thesis just like Michael has. You're going to get the benefit if you have patience.
Yeah, and it's great, really well said. And I think we've talked a little bit about like the FAT protocol thesis, which is the idea that like most of the value, in Web3 is accruing at the base protocol, like the L1 level. What we're talking about here is like actually the applications and protocols off of the L1, because if you do get your timing right, you can really outperform the L1 in some of these emerging protocols if you capture them at the right time. These are still, because we are early in this crypto cycle, I believe, we don't know for sure, of course. We think we're early, and a lot of these valuations are still very low. Like we were kind of doing a lot of our due diligence and kind of portfolio construction in 2022 and last year as well. But I still think some of these are still, because we haven't hit that, like we'll get to this later in the show, that inflection point where the cycle goes to another level and you get the altcoin rotation and everything. We haven't really had that just yet.
The mania level.
Mania level, exactly. So let's move on. That's data oracles and another kind of interesting sector that people could check out on Solana. The other area I want to explore is DePIN. So we talked about DePIN in our 2024 projections episode or forecast episode. This is one that I think this DePIN narrative is going to catch hold. And I just pulled up this dashboard here for people that are listening. We're looking at a map of the globe, and it's showing all of the mapping that's already played out through Hivemapper. So what exactly is Hivemapper? This is a DePIN, which is decentralized physical infrastructure network. And what they're doing is essentially mapping the world by incentivizing drivers to install GPS dash cams onto their cars and rewarding people with tokens as the incentive mechanism to drive around with this dash cam and basically map the world. And then that data and then be sold to anybody who needs, any type of GPS data, so which is a big market. And so the reason I think, I've sort of been focused on Hivemapper, there are other DePIN networks that people could certainly check out. Helium is another like popular one on Solana. The reason I think this like mapping service is interesting because it's actually it's a very large market. So I think the mapping market is supposed to be close to $40 billion the next 5 years or so. Services such as like Uber pay Google Maps. I think they paid over $55 billion for their mapping data last year. So it's a B2B business. So you basically, what this does is you've incentivized a global network of drivers. Look, we have Australia, we've got Japan. Like there's obviously a lot of mapping activity in Europe and then in the States. And we've even got some activity happening down in South America as well. What's so interesting to me about this is that you essentially disrupt a really difficult business model and do it in this decentralized manner by incentivizing people with tokens. And I just think it's sort of like when you think about the advantage that Google Maps has on this market currently, it's just that they've got the resources and they've paid a bunch of people to go out and drive around and map the world. It took Google 16 years to get to the total mapping that they have today. It's taken Hivemapper a year to get to half of that because they use this decentralized incentive structure with tokens. And if you're an Uber driver or a Lyft driver, this is obviously kind of interesting for you. You can earn some extra income just while you're driving around. So I think this narrative is going to take hold. I think this is a really, really interesting business model, and these DePIN networks are for real. And when you think about like what was the sort of thing that really gave incumbents an edge in terms of before the internet, when you think of like newspapers and stuff like that, they had physical infrastructure to produce the papers and to deliver the papers. And sort of they had these geographic, kind of network effects that they had built out. And then those were just completely disrupted by the internet, right? That physical sort of network effect that they had was disrupted by the internet. And I just think concept is very, very similar with these DePIN networks where, Helium is building out wireless networks. And so this is something that I think is still at a fairly low market cap. I'm thinking this may catch a narrative. And if it kind of goes viral amongst like Uber drivers, Airbnb drivers, things like that, and they have like chat rooms and things like that where these people share ideas and stuff. So we could see this take off. But this is, again, just another sector within Solana that I think is interesting at kind of this stage of the cycle.
So just some points. So yeah, look, Helium Network, I think a lot of people for whom this might be the second or third cycle, like they would be aware of Helium Network. That was like one of the marquee DePIN projects, even before I think DePIN became a thing, like that word became a thing. Helium Network was the poster child successful project of it. What I noticed with Helium Network and what I'm noticing now when I'm looking at Hivemapper, and this is probably just a cultural input in it, is that for some reason, when it comes to just these advanced technologies, or I should say these advanced concepts, DePIN, in order to just grasp the concept, decentralized physical infrastructure, people would be like, what are you talking about? And what I've noticed with Helium Network, and now when I look at Hivemapper, is that the penetration or the openness of trying these novel concepts is always very high when we look at North America, we look at Europe, we look at Australia. Good to see Australia as well. So just so that you know, majority of Australia's population is always on the coastal side. So when you are not seeing anything in the middle, it's because nobody lives in the middle. It's the desert. So everybody lives in coastal side of Australia. So it's very well penetrated even in Australia. But in Asia, I'm surprised that India, hardly any activity, especially considering that it's the most populated country. South America, hardly any penetration there, especially being an Indian Australian teaching crypto in India. I teach to so many students, large volume of students in multiple universities over here. There is just an increased requirement among the authorities over here to be open to these technologies, because if they're not open, if they don't experiment at all, they're going to be late. Most of the value capture and the benefits of this that the citizens can have, they wouldn't be able to enjoy it. So just maybe it's an emotional me coming to play, but it's an observation that I've noticed that South American countries, Asian countries, Africa, we can understand the challenges of the infrastructure over there, but these three continents are not that open. to export these things.
I couldn't agree more. Like what crypto tends to do is really reward early users. And because it's open like this, you just kind of wish you would see more, like the US is, when you look at this map here, the US is the most densely mapped region of the world. Europe is the second most. Those are also the two like most wealthy areas of the world. You would hope that this would start to proliferate in other areas as well. And we're seeing a little bit of it. But yeah, I think, just really interesting, I think, about the DePIN, and maybe we should just do a show on DePIN at some point. It's really the use of the token to incentivize a global network of people to do something. It's just, that is really what this does. And this use case of, having people put a GPS and a camera mounted on their car and incentivize them to do that, and then to be able to produce something that is happening all over the world is pretty interesting. When these incentive structures are set up properly, you can have a really interesting potential product and outcome. What Hivemapper has done is, like, if you're one of the first people to actually opt into this on the supply side and start driving around, you actually get more of the token. So even if you're early in terms of putting that camera on your car, you get a larger percentage because you took more risk and you were earlier. So I just think the incentive structures are really interesting to focus on.
I think just quickly on that point, because it's a very valid point. I used to say it often within private conversations with my colleagues back in 2017 about this, once I made it clear. And I think you would agree to this statement as well. And it showcases within your work with the DeFi report as well. In future, that's where all the Web3 venture capital people spend a lot of money as well, right? Because they also believe in this thesis. But in future, a Web3 decentralized project that does the same thing, but in a decentralized manner than what a Web2 centralized project does, the Web3 decentralized project would always have a higher market. Always. Bitcoin has shown that, and soon we're going to see other... Ethereum is on its way to show that. Solana would be on its way as well. So I think in future, any decentralized project that disrupts the centralized version of that project, the decentralized one would have a significant higher market cap. Because it's decentralized, power is to the people. They got an incentive market community fit, and they're off to go.
That's a great point. It's and I think part of the reason why these market caps are higher is capital efficiency. Right? When you think about how much is it costing Hivemapper as a DAO to map the world, they raised capital, and then through VCs, they issued tokens. And so this is incredibly capital efficient. They're giving away the tokens as pseudo equity to the drivers. Incredibly capital efficient way to disrupt an incumbent. So I think that's part of it as well. But let's move on real quick. I know we want to get to some Bitcoin, just sort of cycle awareness data here as well. So let me just hop over the other sort of area that you could form a thesis on Solana. Ethereum has, I think it's over 115 million non-zero wallets. So people that, have a wallet, Ethereum wallet. Solana, if Solana is going to be a competitor to Ethereum, it's probably going to have a similar number of wallets, and it's also going to have identity to those wallets, just like Ethereum has Ethereum name service. Solana has something called Solana name service, which is really this BONK protocol. And I'm just sharing my screen here and just showing this, but it's essentially ENS for Solana. They're very well tied in with the Solana sort of ecosystem, the Solana Foundation, similar to how Ethereum and ENS are very tied together. And so this is just another one to sort of look at and look at the adoption, the growth. There's 230 registered addresses. I actually bought the DeFi report.sol and michaelnadeau.sol. So, go out, if you believe that Solana is going to be around for a really long time, it's sort of like getting your Yahoo email address and also having a Gmail one, right? So that's kind of how I think of this. Now let's go to the final sort of piece of like building a Solana portfolio. And I must admit, I have purchased my first Memecoin in this cycle, and we went with BONK. And I believe, Shiv, you are also an owner of some BONK.
Yeah. So I'm also a proud owner of BONK.
Okay. So this is interesting. And I think, we obviously, the DeFi report, we primarily focus on fundamentals, on-chain data, that type of analysis. But like when you're in crypto, cannot ignore what's happening around you. As an investor, you have to see the world as it is and actually just sort of observe these things and say, what's going on here? Why are these so popular? And BONK was one of the first projects that sort of reignited Solana after the FTX went down. And this is a meme coin. So I would suggest people to check out their Twitter. And the first time that I decided to buy some BONK was in Q4. And I was just on their Twitter and I was laughing. I was just laughing. That's like kind of how it started. And I started to do some more diligence. And I'd heard sort of the narrative around BONK a little bit. And BONK is different from other meme coins because they're builders. This is not just some picture of a dog and someone went and minted 1 billion tokens. They're extremely well integrated into the Solana ecosystem. I just pulled up a visual of the integrations on BONK, and they've got over 100 integrations within the Solana ecosystem. Many of these are producing revenue. They've got different BONK bots and trading tools. They've got different reward tools. They're integrated with almost every DeFi protocol. They have a DEX. They're integrated with the Solana, mobile phone, and they're doing airdrops and things like that. It's a meme coin, but it is a different type of meme coin. And the thesis here is really just that meme coins are not going anywhere. People love meme coins. We've already seen sort of a meme coin season very early in this cycle. When you look at what happened on Ethereum last cycle, you had Dogecoin. Dogecoin's not a Ethereum-based token. It's its own blockchain. But you have Shiba Inu on Ethereum, which reached a $42 billion market cap in the last cycle. So again, if you think Solana is going to be that sort of number 3 L1, where is the number 1 meme coin going to get to in terms of market cap? And this is I think it's obviously made a major move here. So people should be careful. It's going to have lots of volatility and, we'll see what happens. But I think this is at a 2 billion or so market cap. Currently, it made a major move, obviously, already. I think it's up 10x or something or so just over the last quarter. So yeah, curious to get your thoughts. What got you to buy BONK? Have you bought meme coins before?
Yeah, look, I'm glad you asked this question because we need full disclosure on this show. So I have exposure to Dogecoin, I got exposure to Shiba Inu, and I got exposure to BONK. These 3 are the only meme coins that I've got exposure to, and I was going to answer it anyway. But the reason why I got exposure to meme coin, and it's an interesting story, you might enjoy this, Michael. In 2011, I completed my undergrad, and I, majored in economics. The hardcore economics nerd, and in Australia. So of course I'm Australian, so this was in Australia. And then when I was completing my undergrad, over there courses finished in December. In November, news came out. I was always very academic as a person. In November 2011, news came out that Northwestern University, for their MBA program, Kellogg Business School, are introducing the first MBA level course on meme studies, because internet memes were a sensation at that, and they wanted to study it at an academic level. I dismissed it initially, just like how I dismissed Bitcoin in 2011, by the way. Regret it. Anyways, better late than never. And then around in 2016, I got back into blockchain, got into Bitcoin, then personally invested in it as well. And, Dogecoin by that time was experiencing its second bull run, that second cycle. It also experienced a highlight in 2013. Was experiencing something in 2017, and in 2021, that was its moment where it became from what I can remember, when Elon Musk went on SNL and on Twitter, I think it went to $70 or $80 billion market cap, Dogecoin. After that, I went back to study the meme studies of that course at Northwestern. I just did an online thing, and I started realizing that a lot of people don't realize how important culture is when they look at investments. I know you can't quantify this. It's very difficult to quantify it. And I would love if DeFi Report would be able to quantify in certain way on how to value these meme coins, if there is even a way. But the point is, for the people out there, especially the ones who've never participated in a crypto cycle. We've participated in 3 now, right? 2017, 2021, and now 2024. So we are now experienced, and that's why you got your first meme coin. I got my Doge, Shiba, and BONK, all 3 of them during 2022 as well. This was launched in Q4 of 2022 in December. These meme coins somehow unite the internet community. And that is the basis of that 2011 program that Northwestern University started about the sensation of internet memes. So I used that course to try to understand the phenomena of meme coins. And honestly, it really helped me. And to be honest, I know people would discredit anybody who makes money through meme coins, but I think people are forgetting that, there is a culture element behind investments as well. And if somebody who has participated in 3 cycles, if they are still ignoring meme coins as an investment, Not saying bet the house on it or have a significant exposure to it. But after experiencing 3 cycles, if you're still not having exposure on meme coins, of course, they can crash to zero as well. Then you're not really a good crypto investor, in my opinion.
I think that's fair. And I think it comes back to, and I've definitely come around on meme coins. I probably similar to you, I think I used to be annoyed at things like Dogecoin because I was looking at Bitcoin thinking, okay, Bitcoin has real merit to it. This thing's it's rooted in fundamental economics through proof of work mining. And when you look at something like Dogecoin, it's just printing these Dogecoin coins, and it sort of annoyed me because it's like it felt to me like it was giving the rest of crypto a bad name. And I've come around on this. I've sort of changed my mind. I think that's, to your point, if you're an investor, you need to sort of adapt and see the world as it is and not as you are, right? There's a lot of investors out there that just believe that the only way to do analysis is through discount cash flow and that type of analysis. And that's not seeing the world as it is, because seeing the world as it is acknowledging that, like you said, meme coins are sort of representing internet culture, and we've found a way to put a value on that through these tokens. I think it's the internet just going through the next iteration of things. And that's sort of what crypto represents. But you used to have like chat rooms and things like that where people would congregate, and like that's how people like got together on the internet. And like meme coins, if you go on crypto Twitter and you see everybody tweeting about BONK, or there's another one called Dog with Hat as well.
I missed out on that.
Yeah, I don't have that one either. You know, you see a community is what you see, and that looks like it's almost like an online chat room, but there's a way to monetize and put a value on it, and people love to gamble. So you have to just acknowledge that this is a thing and not think that just because you can't do a cash flow analysis that it's not real, right? So I totally agree. You got to be open-minded. You need to adapt. And if you've been through a few cycles, there is pattern matching and pattern recognition that becomes much easier to see that something's going to probably catch. And that was sort of what brought me to BONK last year. It sounds like similar for you. So
just quickly, really want to stress on another important point. And I'm glad that we both, think alike on the concept of meme coin and the importance of it as well, and why we shouldn't dismiss it. And I don't think it would get dismissed as a cultural phenomena anytime soon. You are right. I used to get annoyed by Dogecoin as well. And then when I saw Shiba Inu later on. But it's very important to stress to our viewers that in no way Michael and me are saying that just like how you value Bitcoin or how you value Ethereum or how you value Solana, quantitatively, fundamentally, using first principles, that you can apply the same framework in valuing these meme coins. If you look at the inflation rate of Dogecoin, it's like fiat money. And people say that Dogecoin is sound money, just like how Bitcoin is sound money. No, they both are nowhere near. They don't even come closer to the tokenomics, the money principles. They're not even close. Meme coins, you need to think of it as a highly volatile internet cultural asset, whereas the other crypto assets that we generally talk about, like Bitcoin, Solana, and Ethereum, they are actual, in Bitcoin case, in my humble opinion, a monetary asset, and in the case of Ethereum and Solana, a technological asset, just like how you see Amazon, Microsoft as technology companies. These are the new age technology projects that are decentralized, which gives you access through the tokens. Simplified what I said, but I guess the takeaway is that just like how you value Bitcoin, Ethereum, and Solana, you can't value these meme coins the same way. So we are in no way saying that have exposure to Dogecoin is smart because the token represents sound money principles or sound token principles. That's not what we are saying. What we are saying is that it's a cultural phenomenon, and there are merits to having some exposure to it, because history has shown that during bull cycles that they happen to outperform all the other matured asset classes, just like how they have been doing in the last 1 week, where they've gone up 3x in 1 week.
Yeah, exactly. I mean, I think that's the right way to approach this. It's a different analysis. I think this is much more nuanced, requires probably pattern recognition from being in this space for a while and just understanding the nuance of crypto markets. And it's sort of like, how do you value attention, right? That's kind of what it's like. There's attention that just gets pulled towards these things, and then that attention can leave quickly, or it can go to the next thing. So that's where the all the nuance comes into play. But anyways, I'm glad I got that. That's a confession on the rundown today that we own a meme coin here. All right, well, I think that's probably good for sort of the overview. We wanted to talk about Solana and some of these sectors within Solana, which we think are investable and worth looking at. Why don't we just wrap this up and go on chain here, and we're going to do a cycle awareness, sort of just run through. We've got, I think, 6 or 7 charts that I want to pull up here using Glassnode's data. And the goal of this exercise here for the last 15 minutes or so is really to just assess where we're at, or where we think we're at in this cycle based on on-chain data and historical comparison. I think it's time to go on-chain. Is it time to go on-chain?
We should go on-chain, Michael. If you say we should go on-chain, I'm going on-chain with you.
All right. We are on chain, and shout out to Glassnode for the cycle awareness data.
Thank you, Glassnode.
We're looking at here, this is the first chart that I want to, again, these are like market signal charts that we're looking at. This is different from looking at a lot of the other on-chain data that we look at on Token Terminal, which is really kind of related to specific projects, analyzing the business models. This is a different exercise, and we're only looking at Bitcoin data here. So MBRV ratio, what is it? It is the market value to realized value ratio. So what is realized value? Realized value is a proxy for the cost basis of all of the Bitcoins in circulation. And the way that gets calculated is it's based on coins that have moved off chain, right? So if you bought some Bitcoin and you left it on an exchange, that would not be included in this data. It's only looking at stuff that's been moved off the exchange. So for example, Shiv, if you went out and bought some Bitcoin yesterday because it was at all-time highs and you just wanted to buy some as a celebratory, what you would probably do, because your experience is you would move that Bitcoin into your personal custody. Now, what Glassnode is saying is, okay, now the clock is ticking. What that would record is say, what's the price of Bitcoin when you moved it? And now the next time you move it, it's going to assume that you're basically sending that back to the exchange, and it's going to look at the price there. So it's constantly updating the realized value, which should be somewhere near the cost basis of all the coins in circulation. And what this is telling us right now is the MBRV ratio just got up to, it's over 3. Now it's moving up a lot. When I shared this report that went out last week, it was at 2. And so what does that mean? It means that the price of Bitcoin is now 3 times the average cost basis of the Bitcoin in the network, which is consistent with, I would say, early stage where we're starting to get up there a little bit here. This metric peaked out at 7.6 in the last cycle as a way. So that's kind of what we're looking at. Maybe it peaks out even lower. We can see even the prior cycles, it peaked out much higher. So it's possible it actually peaks out lower in this cycle. And we need to be aware of that. We're obviously very bullish about these ETFs and everything, but, we still need to be open-minded that things can change. This metric has just done an incredible job. You can see it's basically timed the cycle peaks and the bottoms. It's kind of a great indicator of when you're peaking versus bottoming. And when it goes into the green zone here, this is when it's under 1, that is historically the best time to buy Bitcoin. And then if you're selling your Bitcoin, you want to do it when this thing is peaking out. Obviously, we don't know when it's going to peak out, but this is a way to see what's happening. And just over the last quarter or so, it's made a big move. So this tells us we're early in the cycle, but things are heating up a little bit, I would say. So
big fan of this ratio, to be honest. I've always followed this ratio, and I'm glad that you gave that wonderful explanation, honestly. You should be Professor Michael Nadeau. I'm going to be teaching another session soon at another business school. I'm going to invite you as a guest lecturer, Michael, to teach these MBA students about these things using Glassnode soon. But I'm so glad that you explained it so well, because the last year's episode of the Bitcoin Health Check that we did, we touched upon this ratio. And we said that we're going to come up with another episode where we're going to explain it. You explained it so beautifully, and what an occasion to do it when Bitcoin price is at an all-time high. And because I feel generous, because I got my blue glasses on and I've got a little bit under the weather, I feel generous in making some calls. I honestly think, given the structural Wall Street coming to Bitcoin and being open to it as an instrument, I honestly think that this ratio is going to get peak in this cycle. So not just the price, which we've already experienced, but the last time we saw a massive peak for this ratio was way before 2017. I think we are going to see a new peak for this ratio in this cycle. I strongly feel that.
Interesting. Okay, so you think it's going to go higher than it did in the last cycle?
According to me, it would. My common sense tells me that how could it not? When Bitcoin spot ETF, in just 2 months, they are buying so much of Bitcoin halving coming up. I think quantitatively, this ratio should exceed. And what that also means, just to touch back to what you said, this is my opinion. Everybody should do their own research and then make up their own mind. But I think that we probably are going to see Bitcoin very close to gold's market cap. So not just it's going to breach US company, Amazon or Apple's market cap. I think it's going to be close to the $10 trillion market cap. It may not breach it, but this bull cycle is going to continue till 2025. In my humble opinion, we're going to see it closing around to $10 trillion. I wouldn't be surprised.
So, okay, just to double click on that, you're saying Bitcoin in this cycle, you think it's going to go up to like 500,000 per coin? Is that because that's where 10 trillion gets you, I think, if you back into it?
Yeah. Approximately 650,000 US dollars gets you the match the market cap of gold, according to companiesmarketcap.com, which aggregates all this information. And yeah, I feel that there is high probability that by next year, 2025, Q3 or Q4, we're going to see it. The intensity and the acceleration would be so quick that it would be close. That's my humble opinion.
I think that's the first big, bold statement we've had in terms of price predictions. Yeah, that's interesting. So yeah, I mean, we'll see. I mean, it's interesting because I was looking at just some numbers on how quickly the Bitcoin doubled after it got to its all-time high in the last few cycles. I'm going to ask you, I mean, this is interesting, but how many days did it take for the price of Bitcoin to double after we got to all-time highs last cycle? Do you know? Or do you have a guess?
To double? Okay.
After hitting all-time highs, yeah.
Okay. I think it would have been less than 45 days.
It was 10 days.
10 days.
10 days. And it was the prior cycle, it took 85 days for it to double. And then the 2 prior cycles to that, it was 10 and 11 days. So 3 out of 4 cycles, it's taken 10 or 11 days for the price to double once all-time high was reached. So maybe, you might be right. If we end up somewhere around 140,000 or something pretty quickly, I would expect volatility. It just feels like it's hard to move that far, that fast, but who knows? We'll see. Moving on here, let's go to the next metric. We are looking at Bitcoin dominance now. And the reason this is important is a classic crypto cycle starts with Bitcoin dominance increasing early in the cycle. And then what tends to happen is there's a wealth effect that comes with the price of Bitcoin rising. Long-term holders will start to rotate out and they'll be looking for, we just shared some of those opportunities in Solana. They'll rotate out and then be looking to deploy into stuff, like we just shared, because the upside potentially higher, right? Once Bitcoin gets up to 150,000, it's not going to do a 10x from there, I don't think. And then people are looking to rotate out. So that's typically the progression that you see here. And this looks very classic, right? We saw last cycle, Bitcoin got up to 70% dominance in the market. It was rising, heading into the cycle. We got down to 38% in the bear market. And now, classic kind of action here. Bitcoin pulls the market out of the bear market, and we're up to almost 53% of Bitcoin dominance. I don't think it's going to get to 70% like it did last cycle, but I was expecting this to keep increasing through all-time highs. And then that's when things get a little wonky and the mania starts, and that's when the rotation happens, I think, into altcoins. We'll see. Maybe it's different this cycle because Bitcoin is available through brokerage accounts and 401ks. Like maybe the market structure has changed a little bit and Bitcoin actually continues to outperform longer than we think possible. But yeah, curious, any thoughts on dominance here?
So look, you explained it well. This is a well-known phenomenon, especially to participants in these cycles. But yeah, I think you raised a good point about market structure. It could be different this time because when you look at the market structure, it is very different than previous cycles. So it could be different. We got to be open-minded about it, that this could be different. And I also do agree with you that given the maturity of the other smart contract platforms and the ecosystem that is being built, previous cycle was mostly about Ethereum. Now Solana is picking up, and we've demonstrated that to all the rundown viewers through your great analysis. It's going to be hard for Bitcoin dominance to continuously be at 70 to 80% because the entire crypto ecosystem and the other projects are pulling up their weight and getting more and more matured and competitive, innovating and onboarding novel business models in a decentralized way, just like Hive Mapper that you showcase. So yes, market structure is different. And yes, this has proven to be a good leading indicator to identify that all cycle is going to come as Bitcoin dominance continues to increase. But yes, I think 70 to 80% is going to be increasingly difficult as the crypto ecosystem with so many chains coming up and so many dApps getting developed on these chains. It's going to be difficult for Bitcoin to continue to have those, pre-2017, those 70% market dominance.
Yeah, I would agree. So anyways, this is basically classic what we're seeing. And I will say we tend to see like pattern recognition tends to play out consistently over these cycles for whatever reason. So this looks pretty classic, and it's another indication that we're sort of early in the cycle, we think. Anyways, so moving on here. So long-term holders, you're analyzing what's happening on chain. You need to be looking at the long-term holder cohort. This is the smart money of Bitcoin, and what this chart is showing us is the smart money of Bitcoin accumulates Bitcoin, at the cycle lows, like we showed with the MBRV ratio. When that gets below 1, that's when they're stepping into the market, and that's how you make real money in Bitcoin. When you step into the market, when FTX is happening, it takes a lot of guts to do that, but that's where sort of the long-term holders are with really strong conviction. That's when they're buying, and you can see that here. So when the price starts to rise, you can see that they're actually selling into that. And so the supply of Bitcoins held by that cohort is dropping as the price rises. And then as the price drops, they come back into the market, right? So you can just see how that plays out. So retail is not smart money. They are buying up here, and the long-term holders are selling them their Bitcoin. Is kind of what's happening there. So we always need to pay attention to this. We can see even the last cycle bottomed out at the peak of the market. We've just recently seen a slight downturn. Right. So this, again, consistent with early stages of a bull market where this starts to slope down a little, and they're starting to sell into this price action. Just to double click on this downward slope here, just the beginning stages of it, we can just look at the net position change as well, just to kind of double click on that. And here's where we see the first early signs of selling. We can see that long-term holders were primarily buying, really since the bear market started around here, and primarily buying. And now we're seeing the first early signs of selling, again, consistent with, I guess, early stage of a bull market.
So just quickly, man, I really want to credit and thank Glassnode over here. And I know I echo the same sentiments as you. To be able to have this data available through just a subscription of Glassnode is so useful when you're analyzing, in our case, Bitcoin as an investment, or even if you're a trader. So a lot of thanks to Glassnode for continuously innovating. A lot of thanks to, the product managers over there that come up with these innovative ratios, working with academics and the users. Because these are so useful for an investor. So great analysis by you, Michael, and great platform, Glassnode.
Yeah, this is unique. I mean, you don't see this in, traditional assets where it's almost like you're looking at the bank accounts of everybody on the network, and you can see what they're doing. It almost feels like it's insider information or something like that sometimes. But, these are public. I have to remind myself, these are public networks, and anybody can access this data. Glassnode, you obviously need to be pretty technical to be able to visualize it and curate it and structure the data the way that Glassnode is doing. But I just love the transparency with this on-chain data.
So because I'm generous and because I'm under the weather, wearing my party blue glasses on, I'm going to make another bold statement, and this is not related to price. 10 years from now, people would be like, this was so obvious that this is the new age of investment profession doing this form of analysis, and they're going to be looking at Michael Nadeau's DeFi report or our podcast and be like, these guys were telling us this is how you analyze using these platforms. We didn't listen, and now 10 years now we're doing it and competing with all the others, like how people compete with CFA in order to analyze stocks.
I hope so. Otherwise, I don't know what the hell we're doing here. So
we're holding bonks, and I'm holding Shiv Mehta, and also that's all.
Exactly. So just shifting over here to miner activity, we always look at what are the miners doing. The miners are the first people to get their hands on the new Bitcoin that comes into the market. And we've talked about this on a few recent episodes, but the miners have been selling into this price action, this strong price action, pretty strong activity coming from miners. And we've talked about this. This is the thesis we've come up with here, is really just the halving is a month away. And which means that the amount of supply coming into the market, which is the product that miners sell, is being cut in half. So if your ability to sell your inventory is getting cut in half, that means your revenue gets cut in half as well. It looks to me like this is treasury management, corporate treasury management to shore up the balance sheet, make sure they can meet all their obligations, because this is actually a little bit different this cycle. The price of Bitcoin typically doesn't breach all-time highs before the halving. It usually comes later, and there's time where they have to hold themselves over until the price actually catches up and they're sort of back to being whole from where they were, prior to the halving. I'd say this is probably not telling us too much about the cycle itself, but at least it's giving us an indication of like what are miners doing out there and what happens if they stop selling, right? That's just another bullish catalyst if this stops. So,
and it's a good point that you alluded earlier, and this kind of, again, reinforces that it could be that this time it's different because the market structure has changed significantly. Just like you said, yes, this is the first time we've reached all-time high before the halving event. If you ask me, it's because of the market structure change in the Bitcoin spot ETF at Wall Street. So very important to realize that while on-chain analysis is important, what's happening around when it comes to market structure is also important to incorporate within your analysis.
Couldn't agree more. Moving on here, we'll wrap up in a few minutes. Thanks for everyone. This is probably going to be one of our longer episodes here. So I just pulled up another chart. We are looking at the percent of Bitcoin available on exchanges. So the percent of the circulating supply. And what the chart is showing us is that since February of 2020, we've been on a steady decline to the point where only about 11.6% of the circulating supply is currently available on the exchanges. So, we'll see. This is interesting. It was at, before we started sloping down here, we were at 17.4%. So pretty decent move down. Just indicates people are moving. I think part of this had to do with FTX as well. This is really where FTX occurred. And then we had a major slope down because people were moving their Bitcoin off of exchanges and because they're worried. And it's kind of stayed there since. So it sort of gives you an idea that Bitcoin as the market heats up, there's less and less supply available on exchanges. We obviously know what that potentially means for price action. If there's just no supply, people are bidding up the price. So always want to look at what's happening from an exchange perspective as well.
For this, Michael, I'm really keen to get your take because, again, I got so many mates who work in crypto exchanges, and really I'm interested to get your take. And I think this will be useful for the Rundown viewers as well to get insights from you on it. We really are now in the Bitcoin accumulation game where institutional fund managers are going to compete among each other, but also exchanges are going to compete to get hold of Bitcoin. And exchanges play a very important role as well. In this war of accumulating Bitcoin and making it available for the highest bidder, where do you think exchange would stand?
I'm not sure I understand the questions.
What I'm trying to say is that institutional fund managers, the way that they are accumulating, if they're going to continue accumulating at this pace, of course, there's going to come a saturation point where they're going to realize that, okay, we got a lot. Depends upon market. Nobody can predict it, at least not me. But basically what I'm saying is, in order to hold Bitcoin, institutional fund managers are now competing with exchanges. So are you predicting this downward slope is going to continue to go downward? Because in my humble opinion, I feel institutional fund managers are going to win the battle of accumulating more and more Bitcoin over time.
We'll see, because I would say that this will be interesting to observe what happens here, because most of the ETF issuers are custodying the assets of those ETFs with Coinbase. So that means that there's a lot of, Bitcoin that is tied up in these ETFs that's being, held on Coinbase. So I think, that's not Bitcoin that can just necessarily trade in the open market and stuff. But yeah, it's an interesting question. I have heard that there is sort of a squeeze on the amount of Bitcoin that, and if you're buying Bitcoin in size, I think it can be hard. I've heard fund managers talk about how it's not easy to just buy a ton of Bitcoin and without moving the price and things like that. And so, when these ETFs have to go out into the open market and buy all the Bitcoin for what was purchased that day, I have heard that there's some OTC stuff starting to happen. The lending rates on Bitcoin are going up to 10, 15% because they're paying that just to get their hands on the Bitcoin to rebalance the ETF. So we're starting to see that where there's like this little, kind of like a little bit of a supply shock here. And if you own a bunch of Bitcoin, you could potentially lend it and get pretty good interest rates because there's so much demand to meet the obligation on the other side. So it's another, we talked about market structures a lot in this episode, but it comes back to that ETF, I think.
And just quickly, we haven't even spoken about private corporations using Bitcoin as a treasury, but I feel with having a successful ambassador like Michael Saylor, who's really doing well for his company, just purely because he's got exposure and he keeps on buying Bitcoin, is going to make other CFOs, especially now that Wall Street is open to Bitcoin, other CFOs of major corporations are going to start also thinking about using Bitcoin as a corporate treasury asset. And they will hodl it as well. So that's why, man, I think 2025, gold, Bitcoin, they're going to be competing each other for the market cap. Shout out to Peter Schiff.
Oh boy. Yeah. Well, we'll see. Yeah, that's pretty interesting. Let's wrap it up here with a couple other charts. I just pulled up this is the last one. So this is more of a short-term indicator. So we just went through all the on-chain signals, mostly indicating definitely heating up here in terms of what we're seeing compared to last cycles, but still, we think in the beginning stages of this cycle. The other thing to keep an eye on is just the short-term indicators, because I'm expecting lots of volatility. So, I'm expecting a pullback. Maybe we're going to have one. We're recording this a few days before we release these on Fridays, and maybe there's a pullback by the time this gets released. But I think there were 6 pullbacks of over 30% in the last bull run, and it usually happens because the market gets way out over its skis in terms of like leverage, and what you end up seeing is this type of behavior. So we're starting to see like funding rates, for example. This is sort of how I look at just sentiment and leverage, but funding rates are getting up there, and this is usually when you get the big correction, when this gets just like way out over its skis. If I pull this out a little bit, we can see that we're not anywhere near where we've got in the last cycle, but certainly like compared to where we were, the funding rates are getting a little bit heated up. So, we've seen this is just classic human behavior as it pertains to crypto markets and traders, and people come in, they see the prices rising, they put on leverage, everything gets way out over its skis, and then that greed flips to fear and really fast, and you get the correction. So we'll be looking for that. And just along these same lines, this is the open interest. I mean, this doesn't necessarily mean it's all correction is impending, but this is just open interest futures contracts. So there's just a lot of activity here. And this has the breakdown in terms of, the actual exchanges. We can see CME is on here. CME has the most open interest. So it looks like what's happening here is institutions are stepping in after the ETF came out, because you can see this really blow out. So there was only, looks like 6 billion of contracts in open interest. This was back on January 11th. This is the day the ETF was launched, and we're up to 8 billion, 8.5 currently. That's just on CME. This is already getting to levels in terms of open interest futures contracts to where we were at the peak of the last cycle. So something to keep an eye on. It feels like we're due for potentially a correction here, but that's it for, I guess, the on-chain data update and for cycle awareness. One thing that I'm always, thinking about is like, is retail here? I think that's the final question to be asking. And I don't think so. And I mostly am basing this on just like personal interactions and anecdotes from my own personal life. I remember like in the last cycle going out to dinner, and like the bartender would be talking about crypto, and the barber would be talking about crypto, the Uber driver is talking about it, and I just haven't seen that just yet. But some of the indicators that we are at that stage of the cycle, I think, would be just the classics like CNBC, and we're starting to see, they talk about crypto a lot now. They'll be talking about it constantly. The Coinbase app, went to number 1 in the App Store last time. When I wrote this report, it was 186. It is moving up. So we're seeing there's some movement here now, but it's still nowhere near like top of the chart. Google searches, I think we've shown this in a prior episode, still pretty low for Bitcoin and crypto. YouTubers. So the shill YouTube channels, you'll see massive growth on those when you get to the retail stage. We haven't seen that just yet. It's always good to just remember like what was happening in the last cycle with all the laser eyes and people like Tom Brady, putting laser eyes, politicians coming out and supporting Bitcoin. We haven't seen this just yet, but I expect this to happen again this cycle. And yeah, just random stuff like, that retail has entered when people are like, saying they bought like the Japanese version of Bitcoin. So when I start hearing things like this, I'm like, okay, it's time to sell everything, right? No, just kidding. But these are the indicators. Or you go to a conference and people at the conference are just like totally losing their mind. Always a good, indication that, we may be sort of hitting the top. But I would say we're not there yet. That we'll continue to kind of give these types of updates as we move through the cycle, and hopefully this helps people anchor themselves to some data versus just being on crypto Twitter or watching YouTube videos and things like
crypto YouTube videos that are not on DeFi Report or the Proof of Work podcast, because we don't chill. We look at the data thanks to Glassnode and thanks to Michael and the DeFi Report. Michael, this has been our longest episode, but I think it's quite valid that it is, because Bitcoin has reached all-time high few minutes before we recorded this. And I think you covered Solana. There's a lot of Ethereum in that. And people who are knowledgeable would understand that with us covering Solana, we're covering Ethereum in a way, because Ethereum is a mature smart contract platform. And what we're telling is Solana could be the next Ethereum. So a lot of insights for the knowledgeable one about Ethereum as well, and how we're thinking about it while we're covering Solana. We covered so many on-chain analysis about Bitcoin dominance and so forth as well. This was a great episode, Michael. Really loved doing it. My apologies, I was coughing in between, but Gian and his team is going to fix that up in the sound, so don't worry about it. But thanks again for all the people out there. Subscribe, DeFi Report Substack, on our respective socials, on Twitter. I'm on Twitter as well now. I've just started writing on Twitter, so follow me on Twitter as well if you want to. But otherwise, follow Michael's YouTube channel, follow my YouTube channel. We're looking forward to continue doing this week after week. But yeah, this was a great episode, Michael. Any last talks by you?
I would say maybe, do you have an IV after we wrap here? I think you could probably use one. Thank you for fighting through this episode of The Rundown. We appreciate it. Yeah, hopefully this is helpful for people, and we'll see everyone next week.
Amazing. See you guys.